Hi, today we are discussing about Mindtree's fourth quarter FY19 earnings. In the middle of a takeover battle from L&T, Mindtree came out with a strong set of numbers, gave a very good guidance and pleased the shareholders with a very generous dividend. Now let us look at the result in details. What were the key positives? First and foremost, for FY19, Mindtree crossed the $1 billion revenue mark with a dollar revenue growth of 18.3%. For the quarter under review, revenue at $262 million showed a growth of 4.2% in reported currency and 3.9% in constant currency. What is more interesting is that the revenue growth was broad-based in terms of geographies as well as verticals. The digital piece, which is almost 50% of the revenue, also grew at a very healthy clip. In terms of margin, for the full year, the margin grew by 160 basis points. For the quarter under review, all the margin reported a decline of 70 basis points, but that was because of the currency. The underlying margin performance was quite strong. The company guided to a low-teen growth in constant currency for FY20. This is for the first time the company came out with an overt guidance for FY20. And in addition to the revenue guidance, the company has also guided to 100 to 120 basis points improvement in margin. This is over and above the 150 basis points improvement in margin on account of accounting changes. Finally, the company declared a dividend of close to ₹27 per share. Now, what were the key worries? First and foremost, although the company has been alluding to a very strong demand environment and deal wins, the same has been not translating to an equally encouraging order inflows. Secondly, in the quarter under review, there was a slight increase in the attrition rate from 13.4% to 14.2%, although the management refused to attribute it to the current takeover battle and said that this was more a seasonal phenomenon. Finally, because of the cash outflow on account of the dividend, the company may be left with very little resources to pursue inorganic opportunities in the medium term. The key question is what to do with the stock. Given the extremely encouraging earnings report and the guidance, we have revised our earnings estimates upwards. The stock looks extremely reasonably valued at 13.7 times FY21 projected earnings. We feel that at the price of ₹980, the acquirer might find it very difficult to make the shareholders tender the shares in the open offer, and hence there is a very high likelihood that the open offer price may be revised upwards. Hence, the shareholders of Mindtree will certainly have the last laugh. Thank you.